Hello students. In the previous topic, we have discussed capital expenditure versus revenue expenditure. Now we look at the examples here. So see here, they have given 7 examples relating to the what is capital expenditure. First one is cost of reconstructing, refurnishing of a business building. Means you are doing some reconstruction, refurnishing. This we call it as what? Capital expenditure. Payment made with SSC with a view to keeping his competitor out of his business, means out of the field of the business, means in the tough competition some payment has to be made. This is also called capital expenditure. Expenditure incurred in converting business premises when switching over from one manufacturing product to another manufacturing product. This is also means you are changing your business from one product to another product. This also comes under the capital expenditure. Expenditure on litigation in connection with acquiring or curing defect of SSC's title to the assets of the business. So, if the title, there is some problem relating to the title, we can change the title also. So, whatever expenditure we are incurring, we treat as capital expenditure. Compensation paid for cancellation of contract for the purchase of machinery. Means we have entered into a contract to purchase a machinery, but you are unable to go further into the contracts. Further, you have paid the compensation. Whatever the compensation paid, it will be treated as capital expenditure only. Price paid for the purchase of partner share in the firm. Means you have paid the price for him to get more share in the firm. So this is also a capital expenditure. Expenditure incurred on the maintenance of business reputation. So whatever expenditure you have incurred for the maintenance purposes, all these expenditure are called as what? Capital expenditure. Next we'll see what is revenue expenditure. So these are some of the examples of what? Revenue expenditure. Okay, made for technical assistance to access to the fruits of the continuing research. If you are doing any research, for this you are providing what? Technical assistance. So all this expenditure is what? Revenue expenditure. Expenditure incurred by professionals on study tour to acquire the latest knowledge. Means you have incurred certain expenditure on the professionals. So to get the latest knowledge. So this all these called revenue expenditure. Any expenditure on replacement of the part of the plant which does not bring any additional advantage to the business or SSC is a revenue expenditure. See, here you are what doing? Replacement of the part and it is not bringing any additional advantage. Earlier I have told you, if the machinery, if you have increased the capacity of the machinery, it is treated as capital expenditure. Means here increasing capacity means what? From 1000 units, we are able to produce 1200 units. Here there is no such additional advantage. Just you are replacing the part. So this is treated as what? Revenue expenditure. Expenditure incurred to send employees abroad for practical training in the field of the business of the SSC. So any expenditure incurred on your employees will be treated as revenue expenditure. Expenditure incurred by way of fee paid to the value for assessing the business premises. So for valuation fee, in order to have your own business, you need to get the what is the amount of the your business premises. So that will be treated as revenue expenditure. Expenditure incurred in raising loans. So whatever expenditure incurred for raising the loans like stamp duty, registration, legal fees, brokerage. So all these are what? Relating to the revenue expenditure. Compensation or payment to get rid of a servant or a managing agent in the interest of the business. See, here, if you are voluntarily removing one employee or a managing agent, whoever, this is treated as capital expenditure. But what you are doing here, they are causing you a trouble. Get rid of a servant. Okay, so the compensation paid for him is treated as what here? Revenue expenditure. If you are removing your employee by terminating his services, that will be treated as what? Capital expenditure. any such expenditure incurred wholly, totally necessary for a business. So these are all what examples of the revenue expenditure. Now we look into the topic. What is capital receipts versus revenue receipts? You know what is capital receipts? Means when he has sold an asset, okay, will receive certain consideration, right? That we call it as what? Capital receipts, which is chargeable to tax under the head capital gain. Whereas revenue receipts are what? Are taxable on the other heads. So what type of revenue will you receive? Like you will be receiving rent, okay? So this will be taxable under hard income from house property. You will be receiving the business income. That is what a revenue receipt. Okay, it will be taxable in PGBP, and you will be receiving interest, okay, and it will be taxable in income from other sources, and if you are receiving any salary, that is also called as what? Revenue receipt. Okay, now these are the immaterial consideration we have not look into while deciding whether it's a capital receipt or revenue receipt. So in deciding whether a particular receipt is capital or revenue, the following consideration has to be considered to be immaterial. Means we should not look into these factors, okay, and not going to decide or change the character or the nature of the receipt. The first one is receive in lump sum or installments. Okay, lump sum means what? At a time you are receiving, right? So receiving lump sum means you will treat it as a capital receipt, or receiving in installments treated as revenue receipt. No, na. So lump sum may be a revenue receipt also, or lump sum may be a capital receipt also. See, for example, here, whether any income is received in lump sum or installments, it will not make any difference as regards its nature. Means according to the nature of the transaction, we need to find out whether it's a capital receipt or revenue receipt, but not according to the we are receiving lump sum or in installments. See, an employee is to get a salary of 1,000 per month. Instead of this, he enters into an agreement to get a sum of rupees 36,000 in a lump sum to serve for a period of 3 years. So what will happen is here is receiving a revenue receipt, but you are receiving what here? Lump sum. Means lump sum we cannot determine as a capital receipt. Okay. So the receipt where it is a monthly remuneration or lump sum for 3 years it will be treated as what? Revenue receipt only. Means according to the nature of the transaction, we need to find out whether it's a capital receipt or revenue receipt. We should not look into whether you are receiving in the lump sum or in installment. Okay. Next one, nature of the receipts in the hands of recipient. Whether a receipt is a capital or revenue will be determined in the hands of a person such receiving income. So here will what? Who is receiving such income? So in his hands will determine what is that receipt. Is a capital receipt or revenue receipt? So no attention will be paid towards the source from which the amount is coming. Means from which amount, which source you are paying is not relevant at all here. So here will determine what in the hands of the recipient, whether it's a capital receipt or revenue receipt. For example, salary even paid off of capital by a new business will be treated as what? Revenue receipts in the hands of employee. Means here you have started a new business, nothing much more happened in order to earn certain income, but you need to pay salaries to the employees from where you are paying from the capital. Means by paying capital will you treat it as capital receipt. It will be a revenue receipts in the hands of what? Employee. And the next one is magnitude of the receipt. See earlier example like a lump sum or installment. So here also what how much amount you are receiving. Means you are receiving more means what? It will be treated as capital receipt. No. No. See, the magnitude of the receipt, whether big or small, cannot decide the nature of the receipt here. Means although the size of the receipt in transaction is not entirely irrelevant consideration. Let's see one example. A receipt of 10,000 may be revenue area, whereas a receipt of 1,000 may be a capital receipt. Here, a receipt of 10,000, you are paying a salary to your employees. Okay, 10,000. So it is a revenue receipt for him. Yes or no? Okay. Or you might be receiving some if you have sold some goods. So it will be a what? Revenue receipt. But you have sold some of the furniture of your business. So what will be furniture is a what is a fixed asset. You sold that asset. And what you have received after selling the asset, you got rupees 1,000 as a profit. So what it will be? It will be a capital receipt. Okay. Here 10,000 is what, by selling the goods you have received certain amount. 10,000 is what is a revenue receipt. Here, but you have sold the furniture, for you have received about 1,000 only. Still also it is what, revenue, capital receipt. Sorry. So this is what relating to the magnitude of the receipt. Next one, name given by parties and treatment in books of account. Okay, what name the recipient or a payer of the receipt has given in the books of account and what name he has called a particular. All such considerations are what immaterial to decide the nature of the receipt. So whatever you have might have written in the books of accounts, we do not look into that part. Okay, so we cannot decide the nature of payment by looking into the books. A capital payment made by the dealer may be a revenue receipt in the hands of what, recipient. Means the dealer has paid out of a capital. Okay, but when you are receiving what here is a revenue receipt. The character of the receipt shall be decided by considerations other than what the name the parties call for business. Whatever the transaction that may be called by the parties, we not look into, but we have to look into the what is the character of the receipt. Then only will determine whether such a receipt is capital receipt or a revenue receipt. Means the nature of a receipt will be determined in the hands of a person receiving such income. Okay. Next, payment made out of capital. No attention will be paid towards the source from which the amount is coming. Salary even paid out of capital by a new business will be a revenue receipt in the hands of an employee. So it was also decided in the case that if the receipt is made out of a capital, the receipt may also be a capital receipt. Okay, you don't look into this, whatever is writing. So payment made out of a capital. Earlier also I have told you. For example, you have paid a salary to your employee out of a capital. It will be as revenue receipts in the hands of a employee. Okay. Next, these are the earlier cases that has happened. Okay. Next, quality of receipt. Whether the income is voluntarily or under legal obligation, it will not make any difference as regards of the nature. So this is means you have received certain amount legal obligation. We cannot say it's a capital receipt. We have received voluntary. We cannot say it's a revenue receipt. So this point is immaterial for us. So what is relevant is here is what is the nature of the transaction. Okay. So as a is nature, then only will determine whether it's a capital receipt or revenue receipt. Termination of source of income. Any sum received in compensation for the termination of source of income is a capital receipt. Okay. Here, see, earlier I have told you. You have removed an employee. Okay. What is it? You have terminated his services, right? Suddenly. So you are paying what? Compensation here. So it will be treated as what? Capital receipt for him. And earlier you have get rid of a servant, you are paying certain expenditure. That will be treated as what? Revenue expenditure. Okay, like that. So revenue receipt for him. So compensation received by an employee from his employer on the termination of service is a what? Capital receipt. Amount received in substitution of income. Yes, you have earlier you thought that you will be receiving certain income, but you are not receiving certain. In order to that, you are receiving what? Substitution. Okay, see, any sum received in substitution of income is what? Revenue receipt. Let's see one example here. A company purchased the right to produce a film. See, the company purchased a right to produce a film from its earlier producer with a condition that no other producer will be given these rights. Okay, so he has already purchased his rights to produce a film. But what he has done, afterwards he found that the rights for the producing this film has been already sold. Means he has already sold that rights. He thought that he will be producing the film. What happened? There is no income for him. For that, what he has done? A company claimed the damages and was awarded what? 40,000. See, while producing the film, he might get some earning of income. Yes or no? But what happened? It was stopped. He was unable to receive such income because of what? Whatever he done, he has sold that price to other persons. So here, it was held that damages received are the what? Compensation for the profits. If he had produced the film, he would have earned profits. But now he's not producing. He's claiming for the damages. So it is a what? Revenue receipt. This is what? A substitution of income, right? So how to determine? These are the tests you need to draw. It is very difficult to draw a line of demarcation between capital receipts and revenue receipts. Some tests, however, can be applied in particular cases. These tests are on the basis of nature of the asset. Okay, according to the nature of the asset, will determine whether it is a capital receipt or a revenue receipt. If a receipt is referable to fixed asset, it is what? Capital receipt. If it is referable to circulating asset, it is what? Revenue. So what is circulating asset? Circulating mode, like data, yes or no? Like stock, yes or no? So these are all what? Material. All these are what? Circulating assets, cash, whatever it might be. Okay. This generally will refer to what relating to the from raw material to finished goods. Yes or no? This we call it as what? Circulating asset. Fixed asset is that with the help of which owner earns profit by keeping it in his possession. Example, what? Plant and machinery, building and factory. So this is what? Whatever income you will be earning from this fixed asset is called capital receipt. What is circulating? Circulating is that with the help of which owners earn profit by parting with it and letting others to become its owner, like stock in trade. Okay. Profit and sale of motor cars is by the business is a what? Capitalist. If he is having a car, he sold that car and he earned a profit that we call as capital receipt. Whereas a profit earned by automobile dealer dealing in cars and selling his cars is what? Revenue. This is his business, right? Selling and uh, receiving the amount from the cars. This is what? A revenue receipt for him. Okay. Compensation received on termination of lease. Where any sum is received as a compensation for the termination of lease, it is what? A capital receipt, because it's a termination of what? Source of income. Okay. Compensation on surrender of right. You have given up your rights. Okay. Any amount received as compensation on surrendering the right is a capital receipt, whereas any amount received for the loss of future income is a revenue receipt. So the author gives up the right to publish a book and receives 10,000 as compensation is a capital receipt. But he receives an advance as a royalty for 5 years. It is a what? Revenue receipt. Test as to purpose of keeping an article. If a person purchases a piece of sculpture to keep as a decoration piece in his house, if he sold it later, it will bring him what? A casual receipt, but not a capital receipt. But if some same sculpture is sold by an art dealer, it will be what? It's a revenue receipt, because he is dealing with selling of an article, sculptures. Okay. If an article is acquired for the purpose of trade, the profit arising from it is what? Revenue receipt. Means stating what? Buying and selling. So this is a revenue receipt. So these are the examples of what? Capital receipts. Following are the important example of capital receipts decided by the courts here. Nazarana received by a grant of permanent lease. Compensation received for loss of right in future remuneration. Compensation received from employer or loss of employment due to premature termination of service. Okay. Price received on sale of know-how. Damages received by an employee who is wrongly dismissed, or payment received by in lieu of notice. See, it's a capital receipt. Amount received by the SSC for digging and removing earth from his land for brickmaking. Contribution received by electric supply company from consumer for installation of service lines. Okay, so these are all examples of what? Capital receipts. And what are revenue receipts? Lump sum royalty received in advance. In Pugri, advance means what here? As a tenant, sometimes you have to pay your owner finance advance, right? Right? This is what Pugri, received by the owner of the house property from tenant. So it will be called as revenue receipt, but not a capital. You are paying advance, okay? After finishing your lease period or tenancy period, you will be get your advance back. Okay, so this is what is a revenue receipt. Okay. Damages awarded by the court to a company for a breach of contract by another company. So you have paid the damages here for the breach of contract by another company. It's a revenue receipt. A passenger is injured in railway accident and temporarily disabled and thus losing income for a short period. Any receipt compensation will be a revenue receipt. But if the passenger is permanently disabled, the compensation received will be a capital. See, there is a variation between these two transactions. Next, what is revenue losses versus capital losses? Distinction has to be made between the revenue loss and capital losses of business under the provisions of the Act. See, capital loss deals with the under the head where capital gains, whereas revenue loss are treated as a business loss and such are treated under the head profit or gains of business or provision. Capital losses, capital gains, okay, whereas revenue losses in PGBP. Distinction has to be made between revenue loss and capital loss of the business, but under the provisions of the Act. The same point has been repeated, sorry. Capital losses can be set off again as what income from capital gain, but revenue losses or business losses can be set off only against any other income of the SSCC. Capital losses can be set off only from the capital gains, whereas revenue losses can be set off against any other income of the SSCC. Ordinarily, a revenue loss is one which is a business sustained by sale of goods of the business or by destruction of stock in trade or non-recovery of amount due from the persons who were to pay the amount. So this was revenue loss, right? Means here is one which a business sustains by sale of goods. Means you are not able to sell, you got loss. And destruction of stock in trade means that the stock was destroyed, so unable to sell those goods. This is a loss. And non-recovery, you sold the goods, but you are not able to recover the amount from the particular persons, debtors like. Okay, so this is our what revenue loss. The capital loss is one which is related to some capital asset of the business. You purchase an asset and you sold the asset. After selling, you incurred a loss. That is what capital loss. So it is very difficult to distinguish between a capital loss and revenue loss, but certain principles on the basis of this, the following decisions have become distinguished points. See, loss due to sale of assets. Where there is a loss on selling a capital assets, it is a what? Capital loss. Where any loss incurred during the sale of stock in trade is a revenue loss. Loss due to embezzlement. Where there is a embezzlement, misappropriation of funds. Embezzlement means misappropriation of funds done by an employee. This cost is what loss to the business, so it is a revenue in nature. Loss due to withdrawal of money from bank. Once the amount is deposited in bank, then it is withdrawn by the employee and is misappropriated. It is a what? Capital loss. Okay. See, from the bank you have what he has done, withdrawn by an employee, and the employee, what he has done, he has misutilized that amount. That is a capital loss. Here, what is happened, the embezzlement done by the employee, you have given a cash, and you have given a cash, and he utilizes for misappropriation. Here is what it's a revenue loss. Okay, loss due to liquidation of the company. Amount deposited by a person with a manufacturing industry to get his agency and lost due to company being what? Liquidated. Liquidated means the company has been closed. So it is a capital loss. Loss due to theft by an employee. Loss incurring due to theft or embezzlement or misappropriation committed by an employee is a revenue loss. This is the same point they are telling 2-3 times. Okay. This is about what? Relating to the topic capital versus revenue. So in this we have discussed capital expenditure versus revenue expenditure, capital receipts versus revenue receipts, and capital losses versus revenue losses. Thank you very much.